that's a deal, right? Ride with me if you ride with me, you can slide with me if you feel like 550 on the 5 sticky, come get high with me, that's a deal, right? That's a deal, right? That's a bet, right? That's a bet, right? That's a deal, right? That's a deal.
All right, what's up, everybody? We're getting everything situated here. We're getting ready to get the FOMC print, and then we'll get the news conference in 30 minutes after that. Still setting up the PC. I had to make sure everything was situated, restarted, all that good stuff. Shouldn't have any issues. Speeds are good. Everything is good. Right now I'm holding a put on the S&P 500 that we purchased the other day when the VIX was cheap. We're also watching Fartcoin for a potential trade setup here for the short. Bitcoin looking good this morning, or this afternoon, sorry. We want Bitcoin to pump because we have an MSTR option position on as well. We are long MicroStrategy, so we definitely want to see MicroStrategy give us a pump out of here. We did break out yesterday. We were concerned that this might be a bull trap. So, well, yesterday would be a bull trap, right? Because you closed above the resistance level. You're breaking out of this descending wedge, which is typically looked at for bullish breakout potential. You're also closing daily above September open. However, you did not close the daily above this candle's resistance. You did break out above this candle's resistance, though. You are pretty much well under all major moving averages, especially the 200 exponential sitting right here, and then the 21 coming in and tagging almost today's high, which caused a reversal, and now we are testing the midpoint of this breakout candle. So if MicroStrategy is going to be a bull trap, then we would expect yesterday's low to be taken out to the downside. If that occurs today with this news, we are going to exit this position. If this stays like this, we are going to hold on to this position because we are long. We want it to break out to the upside with a pretty forceful move. And we'll see if we get that. Everybody is expecting a rate cut today. Here is the Fed rate decision. That's what we're getting here in 1 minute. We are expected to be cutting by 25 basis points. You can see right here on the forecast. Right here. That's your forecasted. That was your last month forecast. And then what we're getting will be right there in 13 seconds. 13 seconds coming. So as soon as we get that, I'm going to probably go ahead and put in a short on the Fartcoin here. We did, in fact, we haven't got the news yet. So I'm not sure what's going on here. Let me refresh this. Sorry, wrong one. We got the cut, 25 basis point. Also, we're going to pull up the dot plot matrix here. That's good news. We need the dot plot if we can get it. I'm going to look for it real quick. Okay, so the short was immediately insta stop on the Fartcoin. But up here at 4-hour res, I'm going to attempt it again. I'm sitting in a short on ENA already also. That has more than enough room on that. I am looking to make a couple $100 here on Fartcoin if it rolls over. At 4-hour res, which is right here. Let me get back over to Fartcoin real quick and then we'll look for the dot plot. So we're focusing on 4-hour res here. The 236 of August range here. This is old 4-hour supply, so we want to see the 4-hour candle close under this. We got 2 hours left on this closure. So we want to watch this area for entries as long as we're trading under it. It is extremely volatile right now. Price is trading, flying around, up and down here, up and down. Dominance today is weak. So that's going to help altcoin strength. And then Bitcoin, if it punches through here, so that will help with altcoin strength. You can see how it is being strong. Looks like it's wanting to liquidate the high of day. High of day is going to be right here. So you could wait for that while it's trading above the level that we want to short it from. That way you don't lose too much money. Or wait. It's being very, very volatile right now. It could be very, very difficult to set in a short. I don't know that this is a short. So here is the current position that I'm setting in short already. This is why I'm saying I have plenty of room on it. So I'm not going to force the issue on the short fart coin. This candle's pumping, but my short entry is up here. Very small position. If we get a retest of this level up here on E&A and we fail there, I will short it, add to this position by doubling the position size. That will bring my cost basis down to here. But I want a short fart coin because fart coin is the best looking one for the short. If you look at the 4-hour time frame here and pull up your moving average structure, you can see that you're right now testing the 4-hour 21. The day 21 is right here. So your daily structure looks like this. 100 is above the 200, so it's not completely bearish, but this was the first 200 daily retest. And we pulled back into support. This is your September VWAP. April's midpoint. This is the level that we need to break down below. I guess we can get rid of that because we already did break down, but we're looking for a reversal here. You could see it run above yesterday's high even. So let's just give it a moment, see what it does through here. Yellow line is the 1 day, the daily 21 exponential. So we could see a big pump here, and then when he starts talking, he could talk hawkish, which I doubt he's going to. All right, so while we're waiting for this to do its thing, why is that? Oh, okay, I see what's going on. This is the day's high. That's yesterday's high. And it is well above our level that we were watching for a rejection. Well above it. All right, so we want Bitcoin to be strong. So we're okay with eating a stop loss, multiple stop losses here. We're never risking more than $30 because if we're right on the asset, we're going to make $300, right? So we're okay to eat a couple stops, 2, 3 even. You can lose $90 if in turn it does roll over. So I've already gotten stopped out of it. So I'm going to just give it a little bit of time here. Let it do its thing. You can see that it is trying to shift bullish here. Risk markets are pumping hard. Here's your S&P 500. So you ultimately filled more than half of the gap. And get rid of that. Midpoint is done. So your cash market is pushing up. And then here are all your relative levels on the futures S&P 500. You are above Monday's high. You're not at all-time highs, which is right there, but I'm sure you will have no problems getting up there. Notice the dominance pump here. VIX also pulling back pretty hard here. Pulling back pretty hard here. So this could end up ultimately be bullish. Friday we got OPEX or triple witching. So this entire move could be reversed then. It might not be a short today. But I do have put on just in case. Just in case. Yeah. So we're getting this move here. We're still watching for Fartcoin to roll over. Let's get the dot plot. We didn't get one. Yeah, it says we did get one. Have we not got the dot plot yet? we go. There's our dot plot. Well, this isn't, there we go, right there. So here's the dot plot. You can see down here, we're going all the way out to 2028 here. So this is where we currently are, right here. So it looks like the mean, is it going to give me mean, median? It's not going to give me the mean, median. Maybe it will later. I'll have to look through all of this before I can really even make any kind of estimate here, but it looks like the mean or median would be in here around like 4.1-ish, 4.0-ish. But that's 2025. So 2026, you're going to expect 3.5. So if we're at 4.25 here, by end of 2026, they're projecting 3 more 25 basis point rate cuts by year in 2026. So as of right now, the Fed is not pivoting. That is all we need to know. The Fed is not pivoting. They are not looking to hike interest rates. Good. That means the markets are still very sound. We still have a very nice, bullish macro, which is what we want for upside continuation. If we're going to short things, we want to short things that are weak, not strong. But we do, today is going to be very important. All day today, for the rest of the day, you could trend higher on these assets. So we don't want to take multiple shorts here. Let's just give it time. He will start speaking in 20 minutes. I'll go ahead and get that pulled up as well. We'll pull that over here off screen. We can pull it up through, it doesn't really matter. We can pull it up through Benzinga or the Federal Reserve. We got to be careful with the Federal Reserve because they do have copyright music. It doesn't really matter. We got multiple different places where we can pull up the speech from. But I don't want to listen to the music because, like I said, copyright bullshit. So stupid. So point of control down here, it suits the pump. Fits the pump, but it is struggling up there. All right, we're back under the daily open on the SPOOs. So I'm going to go ahead and throw a little short out right here on Fartcoin with a very small position size because we're back under that day open. So I'm going to go in easy here. Really easy, right? We do know that it could run above yesterday's high. So in a sense, I'm just going to basically watch my unrealized P&L. If it gets to about 30 to 35 or 40 bucks, then I'll exit and look one more time up there. I'm willing to risk $100 on the trade, right? I'm risking up to 3 stops at $30 to $40 a pop. I'm looking to risk about $100 because I know if I'm right and this thing breaks down and rolls over, it could set in a trending move that's going to pay me multiple hundreds of dollars. I'm literally setting in a trade right now that it's already up $240. So we're just managing risk. We're not gambling here. We're not YOLOing. We're just straight up managing risk because we know we cannot predict what price will do. Yesterday we took a trade on Pingu. The trade ultimately worked and did hit our take profit area, but it then bounced from that area and ran up and hit the stops. You can never predict that. You never know when that will happen or not. There are no signals. I've been doing this for 20 years. If there was something out there, or not 20, but close to 12, 15 years, if there was something out there where it could predict what price would do, I would be using it, and so would everybody else. It just doesn't exist. We'll let the people that want that to go look for that. They'll never find it, so they'll just keep losing money. But we know what's going on here. We know what we're doing. Maybe it doesn't really need to liquidate, but it would have been nice if it would have, as that would have gave us really perfect entries. I never like shorting off of one of these, just the EMA. I like shorting from objective levels. That's this point here. It means my stop is super wide. It is what it is. I'm looking for a trending move. Like what we're seeing finally on the dollar. I mean, Jesus, I've been sitting in this short for so long. I've been sitting in this short since here. And it's literally been sideways forever. We're finally getting that trending move. Finally breaking out of this ascending wedge. This is going to be a trend line that's going to support all of this 5-month range that we've been in, price actions. So here is that 5-month range. Let's fix it here. There you go. So this is the range we're trading in. 1, 2, 3, 4, 5. We're in month 6 of this range. Yearly open is here. So for the first part of the year, we were in a downtrend. Then we went into a 6-month consolidation. But if you follow the trend is down. The trend for the year, not the trend from whenever, right? The trend for the year, this year. So naturally, the position is to wait for the high, short it, and look for the original trend to break down. That's why we wanted a short here. There are only 2 shorts to take on this entire chart for the entire year. Here or here. Right. It's 2 trades all year. All you had to do on USDJPY. So if it breaks down, it could really put in a big trending move. Let's go look at the dollar real quick. Let's go look at it on Pingu. We're not messing with Pingu today. I mean, you can short whatever you want to short, right? Or buy whatever you want to buy. So here is the dollar. Right here. So multi-month range. Multi-month. So if you add the back half or the last half of April, you've literally been in this range since April, since the end of April. Almost 6 months. If you get broken down out of a 6-month range, then we could see a multi-month trend continuation lower to the downside. If we look at this on the yearly, I don't think the macro supports a multi-year bear market. But anytime you put in these kind of sort of like bull traps on the yearly, what are these? Anytime you kind of put in these sort of bull traps on the year, when you put in like a bearish engulf, like here, you have gotten multi-year trending moves. So the same scenario here. You break out, you get an upside continuation and a higher close, and then the next year opens, puts in a lower high or even a higher high, and then rolls over and expands well beneath this year's low. Boom. That and here has given you multiple years with downside moves. So are we about to see something like that take place on the dollar? I can tell you what, Trump wants that to happen. And he wants, or is going to put in a Fed chair that may help that happen. Now, is that good overall for the risk markets? Maybe not this year or next year. It might not have an effect on the risk markets. But I ultimately think that if the yen firms up, that could be very bad for risk markets. That's why we targeted the USD JPY to take the short instead of just getting long something like euro dollar or pound dollar, right? But those trades are justified as well. You could have simply done that. Instead of getting short USD JPY, you could have simply just bought pound dollar, or euro dollar would actually give you the best inverse dollar positioning. You can see how large this yearly candle is. It's a massive, massive beast. And you are currently breaking out of a multi-month range. That's going to be the level to watch moving forward on the Euro USD. If it's able to maintain consistent bullish pressure above this point right here, then you have a legitimate breakout. And then that means your yearly trend, which started here, right here. That's 2025's open right there. I need to mark that. So your first 2 months sideways, and then your trending move. Then you went into a 5-month consolidation. Here's the breakout. So you can see another multi-month run here on Euro USD up to 126 maybe by the end of the year. Maybe you don't get there by the end of the year. Maybe it takes a couple months of next year to get there. But you saw the dot plot. They are literally still looking for lower interest rates. And then lastly, if we go look, I want this on the right charts. We don't need volume. We want this on a month. If we go look at the 30-year yields, literally breaking out of an ascending wedge here. Here's your yearly range. First you set in the yearly low, then you go up, set a yearly high, then you consolidate. Since May, 1, 2, 3, 4, 5 months, you've been trading in a range. So if you were looking for range resolution or trend resolution, since the last thing we did on the year 2025 was set a yearly high, trend resolution would be to the upside. This is a failed breakout, and now you are breaking out from the bottom side of the trend. So we could literally be targeting fresh yearly lows on the 30-year. Right? That's the downside target. All right, so that's going to be across the board. Your 30-year, 20-year, doing the same exact thing. 10-year, same exact thing. And then the near term, 2-year, breaking out to the downside. Now on the 2-year, if you notice, the trend is down. It is not up. Trend is down for the entire year. Because of the dollar's 6-month range, you've also put in a multi-month range here on this. This is because the Fed stopped cutting. We started cutting in 2024, and then they paused, and they've been pausing for so many months. Well, that caused the dollar to go into a sideways consolidation. Now everything's working out to the way the Fed wants it to be working out, so they're going to continue on the path that they've set out to do, which is go into a dovish regime. So you are breaking out to the downside here. This is your yearly low. If you take out April's low, you will literally be making fresh yearly lows on the 2-year. And that is pricing in further rate cuts. Bullish stuff. Bullish. We need to pay attention to the yen, though. If you want to be a bearish, if you want to be like a super bear, I think you should really look at currency futures and pay attention to the yen on a large time frame. Because if this uptrend resumes, then that could put pressure on risk markets ultimately. We don't know that it will, because the people that did participate in the carry trade for the USD JPY, they could have already unwound that risk. The carry trade that took place back here, this chart, literally, if you like look at NVIDIA with it, NVIDIA comes up right in there with it. You can see just how by people borrowing the yen, right? Borrowing the yen and then taking that money and then investing it into NVIDIA. It's a leveraged up long. So if this thing starts to break down, you got a head and shoulders here. If this neckline breaks down at 140, it could cause some risk off on this, unless they've already unwinded all that risk. I don't know that they have, but we'll see later on down the road. If that does happen, you could see a massive move on this, massive unwind of that position. It's hard to say where this could go. So we definitely wanted to be short up at 150, knowing who knows where it can go, right? And that was the whole purpose behind this trade. All right, so Fartcoin not rolling over. Interesting. It's holding bullish positioning here on the moving average structure. We look at the 5-minute moving average structure for the day. You can see the 21 is starting to move through here. You pulled back into support. This white line is going to be the intraday VWAP. Green line, intra-week VWAP. Blue line, intra-month VWAP. So currently, right now for the month of September, prices are holding support at the VWAP. So in order for Fartcoin to roll over and give us a really good trending move, we would need it to break down through this. But we like Fartcoin for the short because of its daily structure, its weekly structure, its yearly structure. Your weekly 21 exponential is all the way up there. Your yearly opening is all the way up here. All right, your daily 21 is right here. So it fits a more weak structure. It fits a more bearish narrative. You've been pretty much getting killed for the last half of July and going into August. September was a pump. So September, we're looking at September as a dead cat bounce. Bitcoin did the same thing. We don't want this to happen, but this is a way for us to essentially get risk on for a downside break. If we see some of these cryptos start to really cut loose to the downside, we don't want to just be long everything. We want to mitigate our risk. All right, let's go look for that. Get ready to put on the speech. All right, risk market's still chopping sideways right here, just under the daily open. We did put in a higher high. We did put in a lower low today, so we're kind of setting mid-range right now, waiting for the speech. They want Fed to come out and be extremely dovish. That's what the market wants. But if he comes out hawkish even a little bit, has a little tone of, we got to be careful because of inflation and jobs, and the market could potentially sell. But rate cuts are bullish for the market. Good stuff. Water. And let me pull up the IWM real fast. I want to see what it's doing too. IWM came very, very close to making a fresh all-time high today. The IWM should like rate cuts more than anything else, because smaller or your small cap companies are so much more affected by interest rates than your large cap company. Nvidia, Apple, Microsoft, they're sitting on billions of dollars of cash, right? They don't need to get a loan to make investments. Well, your small cap companies do. And they don't like taking loans out at 5, 6, or 10% interest. Just your basic economics. And they have been trending up. We bought IWM shortly after it made this false breakdown here. Once it made this false breakdown and then it came in and set support, we bought it in here. Then it broke out, pulled back, broke out again, and it's been on a pretty consistent bullish run ever since. Yeah, you can see we're pushing. Ultimately, this is the level for liquidation. You would more than likely get there, I would assume, anyway, make an ass out of you and me and say, I think it might want to liquidate yesterday's high. If it is going to roll over, it might not, but this is a very bullish candle. But will we close looking like this? That's the question. If we close looking like this and he's extremely dovish for the meeting, then we probably don't want to be shorting this. I tried to buy Bitcoin intraday this morning when we were putting in this candle. I just got ahead of my skis, basically. I knew to wait. Waiting is always the best thing to do on FOMC day. Getting long or trying to get short pre-market or before the meeting is just, all right, 2:30's here. Let's go get the press conference.
Build a website you love with Wix, where your words create.
Yep. Here he comes.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June.
No recession.
In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low
Bitcoin
level.
is taking a beating on that.
Payroll job gains have slowed significantly to a pace of just
It's
29,000
actually
per month
into
over
support.
the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation.
Watch these charts here.
Even
If
so,
these
labor
charts roll
demand has
over,
softened,
Bitcoin's
and
likely
the recent pace
following.
of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods,
testing
but
daily
their
and
overall
weekly
effects on
VWAP.
economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level.
Bitcoin
But
breaking
it is
intraday
also
support.
possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem.
A trending higher inflation
In
is
the
what
near
they don't
term,
want to see.
risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
That's I mean, that's
With
more
today's
hawkish.
decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based
As
on the incoming data,
that comes
the
through,
evolving
data
outlook,
dependent.
and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year. 3.4% at the
Here's
end of 2026,
the link to this SEP
and
data.
3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As
And
is
dot
always the
plot
case,
matrix
these
in
individual
this chat.
forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices.
That's your
We
only
remain
two
committed
mandates.
to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions
Bitcoin
affect
is-
communities, families, and
not
businesses
looking great
across
here.
the country.
still
Everything we do
bounce.
is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
They're going to ask about inflation numbers, job
Thank you.
increase in
Chris Rugaber at
unemployment.
Associated Press. As you know, Fed Governor Stephen Myron has continued, kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly,
Is
how
Trump
can you
bad?
maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
He's not going to
we
get
did
into
welcome
it.
a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals.
Price stability,
We're strongly
job
committed
stability.
to maintaining our independence, and beyond that, I really don't have anything to share.
Yeah, I'm not going to get into political stuff, dude. They know that.
You and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year.
Okay, well, that's good.
Those
That
are not
means
very large effects
that's
at this
good.
point.
That's okay.
And we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible and that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth.
Basically, by them lowering interest rates is good for the spiking unemployment. Like, that's literally what they do when unemployment spikes uncontrollably. They lower interest rates. So by them lowering will should ultimately fix the unemployment. The problem for the Fed right now is the hiring inflation.
Growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply.
Rate cuts are typically bullish for the market, but since we do have triple witching this Friday, so many people were over-positioned long. Like, you can see market participants looking to take some of that long-sided risk off the market in this spike today. So that's kind of why we're looking for a potential pullback here. We're not looking for the markets to become bearish, just a few-day pullback and buy in to be able to buy into the dip ultimately longer term, maybe next week or the week after.
Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmerosa, the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
That's a good question.
I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views.
Very
but a clearly
restrictive.
restrictive level, I would say.
It is very restrictive.
And we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can kind of, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that option entertained at your meeting this week?
If inflation was at 2%
There wasn't
and
widespread support at
then
all
they
for,
would
for
be
a 50 basis point
lowering
cut
it
today.
to
You know, I
50.
think we've done very large rate hikes.
Bitcoin's
and very
trying to
large
take
rate
out the low
cuts
of day
in the last 5
right
years.
now.
And you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like
There
our
you-
policy has
they got
been
it on the 1
doing
minute. I
the
can
right
put it on
thing
the
so
1
far
minute
this year.
if
I
you
think we
want.
were right to wait and see how tariffs and inflation and the labor market evolved.
For some
I think
reason,
we're
on
now
1 minute, the
reacting
intraday
to,
VWAP disappears. but-
to the much lower level of job
Sorry.
creation and
There's your
other
1
evidence
minute
of
chart.
softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Here's the 1 day, 1
Colby
minute
Smith from the New York
chart.
Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago, with the fact
That
that
was
the
a pretty
forecast
nice
for
move on
unemployment didn't
Fartcoin
change.
for us.
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP,
Breaking
actually
under both intraday, intra-week
projections for
VWAP.
growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers.
You're at
And
low
I
of
didn't-
day
I don't wanna
on
put too
the
much
on the
emphasis
spoos.
on payroll job creation, but it's just
Fresh
one of the
daily
things that
lows on the
suggests that the labor
spoos.
market is really cooling off.
Not quite on the
and that
NASDAQ.
tells you that it's time to take that into account in our in our policy.
USD JPY is
The S&P,
bouncing.
once again, the
Dollar
median
is
participant has
bouncing.
inflation higher than previously expected by the end of next year, and the
Which
Fed
is odd.
not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this
VIX
way.
up
We,
at day
we
highs.
fully understand and appreciate that
Dominance
we need to
really weak
remain
here.
fully committed to restoring
Fresh lows on ES.
2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less.
We're like 1 minute
than
behind
one might think.
on
And in
these
terms
charts.
of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Qs have not made a low a day yet, fresh low day yet. They did earlier, but they are headed that
Michael
way.
McKee from Bloomberg Radio and Television.
Fartcoin breaking down pretty
A
good
little,
here for us.
confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand,
Yen is
which
going
is now perhaps
down.
more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
I would like this downside
Follow-up,
move a lot better if the
every
yen
year
was
since
going up
2015, the SEP
with the
has
VIX.
forecasted you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that
Are
that's
you
what
late?
you're going to do if you can never reach it?
That's what he's
Well, I mean,
asking.
you're right. It does say we're going to get to 2% inflation in 2028 at the end of 28. But that's, that's literally how you put the projections together. You're writing down a rate path, which is designed to create over the
Bitcoin
course
is
of the SEP,
way down under
time
fresh
frame,
daily lows.
2% inflation and maximum employment too. So that's all that is.
Bitcoin's
we
just
don't-
about to take
no one
out
really knows
yesterday's low.
where the economy will be in 3 years. But the nature of the
Bitcoin
exercise
did take out
is to
yesterday's low.
write down policy that you believe would return to the
Yesterday's
2%
low,
goal over the-
114,750.
at least by the end of the
114,724 today. You're bouncing pretty hard from that area.
Thanks so much, Elizabeth Schulze with ABC News.
S&P still
The latest
trending
inflation
lower.
report shows that prices
NQ
are still
still
going
not
up across key
fresh
categories
low
for many
yet.
households, including groceries. What will the Fed do if prices pick up more?
Not
Our
hike.
expectation,
No,
and
pause.
you can see this consistently through the year, has been that inflation
Bitcoin liquidated yesterday and
will
is
move up this
bouncing
year,
pretty
but that
aggressively.
basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price
yesterday's
increase as opposed
low.
to creating an inflationary
So right now
process.
you're
That's
bearish
been
engulfing
our
on the
forecast.
day.
Pretty much all the individual forecasts say that.
But you bounce,
We
if
can't
you
just
keep
assume that,
bouncing
though,
from here,
right?
you
We
could
have
close
to-
as a bullish
our job is
engulfing
literally to
today.
make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass through of the tariffs into inflation has been slower and smaller.
Like I said,
The
your
labor market has
altcoins are
softened.
not making
So
fresh
the
daily
case for
lows
there
like
being a
Bitcoin
persistent
and ES,
inflation
which is
outbreak
odd.
is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a
Fartcoin
long
is still
time,
an
our
inside
framework
day.
says that when our two goals are in tension, this is quite an unusual situation.
Inside
how do we decide
day.
what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal. So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very
We
low.
want to see Fartcoin start to
However,
trend, put in a
layoff
trending
rate is
move
also very
here.
low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off
30-second structure,
there won't be a lot of hiring
almost
going
back
on, so that
to
could very
bearish
quickly
on the
flow
day.
into higher unemployment.
Almost back to bearish from going to bullish
healthier
here,
labor market, there would be jobs for those people. But
coming
now the
back
hiring
into
rate is
bearish
very, very
territory
low.
here.
So that's been a growing concern over the last.
So now we
few
definitely
months.
want to look for
And it's
short
one of the
entries
reasons
at
why we
4 hour
think it's
res
appropriate that
here.
we begin to shift our policy focus toward a more balanced one.
Price is 83.93. 83.93. If we get a tick back up there, we'll add to the short.
In the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting?
There's the short.
Thank you.
On Fartcoin.
So I think we're
And
in a meeting
ENA.
by meeting situation. We're going to be looking at the data.
Right
Let me
at
say a
4 hour
word about
res.
the SEP really here. So we often point this out. What the SEP is it's an accumulation.
I had to chase it.
Accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data.
If you look at the structure, and I'll unpause it real briefly, just look at the structure on the S&P 500. And this is basically from when we got the print, we had a nice run up, setting a fresh high of day. The volume has been very heavy on the move down, very light on this move up, very light. Then on the move back down again, you can see volume start to tick back up again. So this volume structure with this candlestick pattern does look like it is trying to put in a trending down day.
The evolving outlook and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or
I'm
more.
only saying that for anybody trying to buy Bitcoin at the yesterday low. Be very careful doing that because this structure looks bearish.
Or cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of
press is
uncertainty of policy
basic losers. Yes, I agree with you, Wes.
Thank you.
You know,
90% of
it's
them
such an
are Trump
unusual
bad.
situation. Ordinarily,
That's basically
when
all they want to
the
do
labor
is talk
market is
about
weak,
Trump.
inflation is low,
And not economic
when the labor market
policies.
is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk, and that means there's no risk-free path.
Yeah, this
And
is
so
a
it's
very
quite
tricky,
difficult
waters to navigate for the Fed.
situation for
Rising
policymakers.
inflation
It's
and
not
rising
at all
unemployment.
surprising to me that you have a range
me,
of
and
views. It's not
with the
so
mic.
much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light
Right
of
now,
this,
it's dumping a little
of the
bit. It's
tension
not
between
a
the two
huge
goals. How
dump
do you
yet,
weight
Philip,
them?
but it is
How worried are you
pushing
about one
lower.
versus the other? And,
We do have a
so
4-hour
it's
engulfing
natural.
bearish
I think
candle
it would
on
actually be
Farcoin.
surprising if you didn't have.
You're making
a pretty
fresh lower
wide range
lows
of
on the
views
S&P
based
right
on,
now.
You know, in this kind of highly unusual situation, and we do. So
Bitcoin is heading back down
get
to
together, we
yesterday's
discuss,
low.
We have a great discussion, and then we decide
Like I
what
said,
to do. And we
right
act.
now,
But,
you're a
right,
bearish
there-
engulfing
it
day
is- It's a wide
on
dispersion
Bitcoin.
of
We don't know
views, and
that
I think
it'll
that's
stay like that,
understandable
but
and natural in the current situation.
it's late day. Day's almost over. There's another hour of trade.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but
Farcoin trending
markets
lower. This
have
is good for
questions
us.
about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
He doesn't look at the
Look,
political
it's deeply
stuff.
in our culture to do our work based on the incoming data.
They have two mandates: job
and
stability
never consider anything
and
else. That's
price
just
stability.
Everybody who's at the Fed really
That's it.
feels strongly
They
about
don't
that
care
way.
about
So,
who's in the White House.
You'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them.
I've heard
in terms of
literally one good
political
question
outcomes.
this
I
whole
think
press
when you get
conference.
to another part of Washington, everything is seen through the lens of does it help or hurt this political party, this politician. That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people they're making their arguments, and we're having a great discussion around these challenging issues. So.
Do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think there's
a pretty decent spike in volume
really
on the
understand this,
S&P.
and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the
Very
birth
decent
death model,
reaction as well.
because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You
Not
can't
seeing
survey
that
for
same
You gotta
volume
have a
spike
model
on
that predicts
Bitcoin.
that. And it's quite difficult to do, especially when
Bitcoin
the
up
economy
top,
is undergoing
Farcoin on
big
the bottom.
changes. So, and they've been
There's your
working on that
volume
and
on
are making progress on it. But
Bitcoin.
the data we
Not
get
seeing that
is
spike.
still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate
back
is quite
under
low
year
for the
open.
first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data
That's
are
a
much
huge
more
volume.
reliable by
See the
second,
big
certainly
volume
the
through
third
here?
month.
Boom,
So
boom,
it's not that
boom.
we don't get the
Consistent
data, it's
volume,
just that we
big
get it a little
volumes, and it's
later.
pushing up. You could be changing the near term here.
Well, for the benchmarks, if that holds, it's 51% of the jobs that we thought were there.
You're
weren't
not
really
seeing
there.
a light
It shows a weaker job
volume
market coming into
structure
this
as
year.
prices
If you
push
had
up.
that
You're
information,
literally
would it have changed
seeing
your mind
heavier
related to
volumes
where
come
the
in
interest rates
on
should
the
be? Should there have been a cut?
upswing.
We have to live life
That is
looking
more
through the
bullish
windshield rather
than
the
this
rearview
volume
mirror,
structure
as you know.
here.
And all I can tell you is we see
On the
where we are
upswing.
now, and we take appropriate action, and we took that appropriate action today.
See the difference?
Thanks. Howard Schneider with Reuters. So
Could be a
as you mentioned
changing
minute ago, some
dynamic
margins of
here.
The job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%. Declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to
Still
arrest?
not really seeing that volume structure on Bitcoin.
I hadn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations.
QQQ's
our
like
market works through expectations, right? So I
pumping.
think our policy path really
This
does
is
matter.
lagged.
And I think it's
We're
important
way
that
up
we use our tools to
at
support the labor market. And
587.
we do see
Oh, I guess
signs
it
like
is
that. I
that
did
lag.
mention that. You see
Sorry.
minority unemployment going up. You see younger people who are more vulnerable economically.
That
more
30-minute
susceptible to
candle
economic
on the
cycles.
SPOOs
That's one of the
right
reasons,
here
in addition
on
to
the
just
cash
overall
market.
lower
Huge
payroll
underneath
job
side
creation
wick.
that shows you that at the margin the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore. Don't want it to.
Gold too.
So
Sorry.
we use our tools.
Look at gold.
And, we
pulling
it starts
back
with a
here.
25 basis
This,
point,
in my opinion,
rate
would be
cut, but
better
the market's also
for
pricing
risk
in a
markets.
rate
This is your
path. I'm
cash
not
market
blessing
on the
what the market's
SPOOs here.
doing at all. I'm just saying
This is your
it's not
futures
just one
on the
action.
SPOOs.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side,
VIX
in
is-
higher income groups.
Excuse me,
Do you
air bubble
feel
in the
that
voice.
that's an
VIX is almost back to
unsustainable,
yesterday's
mix,
open.
for the
So
economy
VIX is
moving
pulling
forward?
back hard here.
I wouldn't say that. I mean, you're right.
We might need
Those
to
are
get out of
two-
that
we're-
far
we're
corner
un-
short.
we're
We'll
getting
give it a
unusually
minute.
large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of
We just
spending,
opened
you
a
saw
fresh
the
hourly
the consumer
candle.
spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5%
Big spike on
1.5% or better this year, maybe a little better. Forecasts have been coming up, as you
Big
can see.
spike.
So, labor market unemployment is low.
All right, this is where we
but,
want to see it reject.
Downside risks, but it's still
We
low
need to mark
unemployment
that
rate.
4-hour
So,
res.
that's how we see it.
We want to see a rejection here.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers
We
from
don't want to see it
mission
trading
creep
any higher
and
than that, or we're going to have to
institutional
bail
bloat.
on our short.
He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful
The
process
trend
of
line that
updating
you're
our-
bouncing
our
off of up there
monetary
on the
policy
cash
framework.
market
I would say there's a lot of
is
work
the
going
trend
on
line for
behind
the month of
scenes
September.
around the assets we have in the Federal Reserve Bank Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero.
Okay, so on the
job
cues,
growth
you're
for
taking
more
out
than
the
a decade.
high that was made when the
we're
press
finished with that,
conference
and I think we'll
started.
probably-
This
we'll
is
probably do more than
looking
that. So
more bullish
I think
than
we're-
bearish
We're
at this
certainly
point.
open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to always trying to do better.
That's your 230
Mr. Chairman,
swing
Neil Irwin,
high
Axios.
right there. You just took
There's been
that
some
out.
debate lately on whether AI
So if it
is
doesn't
already starting to
reject
affect
from
the
here
labor
and
market
start
in
to head
terms
back
of lower
down, it's
labor
probably
demand,
not going back
higher
down.
productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that.
MSTR is a bearish
my
engulfing on
view,
the
which is
daily now.
Also a bit of a guess,
But
widely
holding
shared, I think, is that you are seeing
August's
some
low.
effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use
What are these
AI
two
better, more
levels?
than they
I
had in the
can't
past.
read
That may be
them.
part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has
Monday
slowed
mid,
down.
previous week high.
And so it's probably a number of things. But yeah,
So
it's-
that's where you're
it's
bouncing
probably
to.
a factor. Hard to say how big it is.
On risk. On the futures, you're bouncing to the midweek and Monday's mid, and the previous week high. Previous week's high right there. So weekly chart looks like this. Very bullish still.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic.
Not
Of
a
course,
bearish
goods inflation went
reaction, to
very
say
high.
the
We
least.
essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course
I don't
of the
know if I'm
past
going to
year
add to
is
the fart coin
1.2%,
short now.
which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that to the
It's
current
literally
core
nothing.
PCE
This is a
inflation reading, which
nothing burger.
2.9%.
This is
So
your new
it's
start.
contributing.
Boom. 2 o'clock.
What seems to be happening is,
And this is
that,
all you did for the conference.
The tariffs are
like this is a
not-
retest.
mostly not being paid by
It needs to
exporters,
roll over here.
Mostly being paid by
or we're
really
going to have to get out.
companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence it's very clear that there's some pass-through.
I also wanted to ask.
Well
if you
above
could
the moving
share
average
with us
structure.
The
This
conditions
is
under which you might
this
consider
needs to
leaving
start
the
rolling
Fed
over soon,
in May.
or it's going to
I
stop
have
me
nothing
out.
new on that
As simple
for
as
you
that.
today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on
This
one
is
of
your
your
200
answers,
simple,
just a couple
200
minutes
EMA.
ago. We've
This is
often
far
heard you
enough
talk about
away
how
from that.
you and your colleagues, do not think about politics.
It needs
This
to get
did
back
not enter
under
the
this
room.
stuff for me to hold this short.
But one
If
of
it
your
bounces
new
here,
colleagues does
we're
come from
wrong
this
on
world,
this
right, where
trade.
everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public
it's not even going
interpret,
back down there.
some of his speeches, for example, and then some of the forecasts that we see today. I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys
It goes a
are
little bit
saying?
higher, it's going to
So
stop
there's
me.
12 vote, 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter,
We need a bearish
really-
reaction, like in a bad
the
way.
only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And
Yeah, you even
I
have the
think
same
that's-
look
that
on
is
the
way
1 minute.
The institution, that's in
5
the DNA
minutes
of
is
the
just as
institution. That's
choppy
not
as
gonna
it can
change.
be.
And then I wanted to ask about a Gallup poll that showed that Americans now have
Volume
more
increasing on
confidence in
Bitcoin at the
president than
highs
the Federal Reserve
could
when it
suggest
comes
sellers
to
are
doing
jumping
what's
back
right for
on
the
it, but we're not
economy.
seeing
Why
that
do you think that is? And,
on the
and what's your
S&Ps.
response? What's your message to the public?
Our response
We're
is
not
we're gonna
seeing
do everything
heavy
we can
volumes
to
up here.
Use our tools to achieve the goals that Congress has
The
given
heavy
us,
volume is on the
and we're not
turn
gonna
and
get
push.
distracted by anything. So
That's where the
I
heavy
think
volume
that's
is.
what we're going to do. We're just going to keep doing our jobs.
This looks bullish.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and
Yeah, I'm
also
out
on the
on
flip
Fartcoin.
side to
It's
just
got me.
explain why the plots are really so scattered between
All right,
someone even
there's that.
expecting rates to
Now it's gonna
end up
dump.
higher by the end of the year
20.
to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the
I
situation
think I'm
has
pretty
changed.
much done with the Fartcorn short. Like I said, I still have the ENA open, but I may close that depending on how this candle closes here. If you're still in it, you can still hold it, but you can see it pushed right up there and got me. I had a very, very tight stop once we started to push higher, not coming back in to retest this. This is getting a little bit too far away. It still looks okay if you get a bearish reaction from here. If it comes down in here and finds support at like 83.42, you might want to seriously think about closing it because you could be seeing a higher bounce. And if you just look at risk, I mean, risk is going back up to the highs.
With respect to the labor market.
Like you're
Whereas we
making
could
a
still
fresh
say, and did
day
say
high
in
on
July,
the NQ
at
right
time of the
now.
July meeting. That the
That
labor
is
market
a
in
very
solid condition,
bullish
and we could
run,
point
not
to
bearish.
150,000 jobs per month and many other things.
Well, I'll hold the
I think
E
that
and A,
the
and that's
new data
it.
that
I'm not
we've
going
had,
to
and
mess
it's not
around with
just
Farcoin
payrolls,
anymore.
It's other
I'm
things
going to wait
as
till
well
Friday.
suggests that
Friday
there
is
really
quad
is
witch or triple
meaningful
witching.
downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone
All right,
wrote
so
down,
let's switch this
supported
back to
this cut.
normal.
And some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, those are our two equal goals. And you will see that there's a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
The 4-hour res is also the 236 of August's range after rejecting the midpoint. So, I mean, I still like it lower. You know what I mean? It's like you traded up to August's midpoint right in here, and you rejected at the midpoint, which was also August's open, also rejected the yearly opening range with a very aggressive move lower. We're finding support down here on September's VWAP for now. But this is August's fib, so this is the 236 of August. If you fail here, then there's a really high likelihood that you're coming back to check the September open longer term. So this is a key, crucial swing here on Farcoin. So if you want to continue to watch that level, you can. Like I said, I already have a short on with E and A. So I'm short from up here. I don't need, that trade isn't being threatened. So if the markets ultimately do roll over, this trade will cover me, right? But I'm done with it. I've eaten 2 stops on fart today, so I'm not going to do anything else. It's late day.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect.
Yeah, I ate 2 farts.
It's clearly come way down. You
ate
could,
2
you could
farts,
say
man. They were
between
yummy.
0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly, and that's because a very low.
He isn't acting extremely hawkish any stretch of the imagination. He's just remaining data dependent, so he's essentially just neutral. I mean, if inflation continues to trend lower, then they're going to continue on their path. They're not talking about a Fed pivot. So if you're here, make sure you Fed pivot the like and subscribe button before you leave. We're still on track for bullish markets.
The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Dow is bullish on the day.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation.
They're going to struggling to maintain a bullish trend above the August
housing
open.
is an interest-sensitive activity.
It's currently
So
under
at
the
very
weekly
center
VWAP.
of monetary policy.
That's
When,
a bearish reaction on
when
the
the
risk
pandemic
markets.
hit.
I'm going to
we
get
cut
upset
rates to zero.
if Fort rolls over.
The housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut
can't
so
add to the
aggressively
E&A
and
short
provided
'cause it
credit
didn't
and
go
things like
up
that. They
high
were able to
enough.
finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and
The volume
so
isn't
rates
very big
have
on
come
this
down a bit,
pullback,
and
though,
as that happens, we
on
don't
the
set
ES
we
or
don't set
on the
mortgage
SPY.
rates, but our policy
Volume is-
rate changes do tend to affect mortgage rates.
Not
And that
the
has been
same as
happening,
where it
and
topped out.
That'll of course raise demand, lower borrowing
We
rates.
should start to see volume
for
spiking
builders
going into the end of the
will help,
day.
Get builders will help supply, and so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build.
Yeah,
farther
there
and farther
are.
out, and
Wes, I agree with you on that last statement. Sparkcoin's chart on the 15-minute chart is literally disgusting. I 100% agree with you. There are easier things to trade than this. The problem is nothing else has a really solid bearish structure. You know what I'm saying? This is a very solid bearish trade on the daily, on the weekly, on the yearly. I mean, even if you look at this thing on the monthly, like, this is a freaking short if I have ever seen one in my life. You know what I mean? Can't get any better than that. You literally rejected August open, the yearly open. You've been in a 2-month downtrend here. You just broke out of support. This, if you're going to see a trending move, down is where I'd want to be. Down, not up. But you're probably seeing an exhausted sellers here, even though the market's just refusing to go up. So maybe it needs to go up a little bit higher before the sellers come back. Who knows? It is very choppy. I agree with you. It is a difficult market to trade. You've literally done nothing since we got the news. We had big spikes, but right now you're doing nothing. It's a 3% move. This asset, when trending, can trend as high as 20% in a day. So when Fartcoin is trending, it really trends good. It's just not doing that right now. It is as choppy and sloppy as you said. Now, if you look at where your value area high is, which is right here at 84.16 versus where your value area low is, this is the portion of the daily range where there is the most volume traded. Okay, so like if it cuts loose, rips up and liquidates yesterday's high, and then continues, you do not want to look for shorts on FART any longer, at least not until maybe a 382 retest, right? But if you come up here, liquidate yesterday's high, and then immediately reject and refuse to go back up above that price, then we can go ahead and put on another short attempt, right? Or if you've eaten a couple stops on it already, maybe don't do anything today. Maybe wait for the daily close. That happens at 8 p.m. Eastern Standard Time. So in about 4 more hours, you're going to get a new daily candle. Where is it trading at that point? At that point, you can make a decision as well as to what to do. But as far as a long-term short, like a short where I can get into it and potentially set in it for the rest of the year, this one is my favorite, just based on the structure that we have on the higher time frames. That's all. That is the only reason why I'm focusing on it so heavily today.
So that's where it is.
And just a quick follow-up. During the last SEP,
Whatever
press
I
conference
lose
following the last
today, if I ultimately do nail the short and it does trend lower for the rest of the month and next month, I will more than 10x in gains what I lost today. No problem. And we're still super green on the week. We're up multiple thousands of dollars this week. We're doing just fine. Just fine. You're going to take losses.
You seem to indicate
Gonna happen.
that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
You know, forecasting is very difficult even in placid times. And as I've mentioned before,
Flaccid. Did he say
forecasters
flaccid?
are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Bitch, I got great forecasts. My forecasts are on point. Better, whatever, dude. I don't know what kind of forecasters you're talking about.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting
We do have a
rates,
couple
why
up.
continue to reduce the size of your balance
Tashi
sheet
USDT's
than
up
pause the unwinding?
50% on a 24-hour basis. 22 million tokens traded.
I think
NYX is up
we're cutting the size of our
50%
balance
today.
sheet quite
Again, there's
marginally now.
NYX
As you know, with the
again.
balance sheet, we're still in an abundant reserves
NYX
condition.
is refusing
and
to
we've said
roll
that we
over
would
and
stop
die.
somewhat
That is so
above,
funny.
somewhat
NYX
above
is right
ample
back up to the
reserves
highs
level.
again.
That's what we are, and we're getting closer.
Crazy.
To that. We're monitoring it very
Crazy.
carefully. We don't think that has.
Here's your high runners on
significant,
crypto today.
macroeconomic effects. These are
Toshi,
pretty small numbers moving
NYX,
around inside
Alpha.
a giant economy. You know, the level of runoff is not very large. So I wouldn't attribute
Hi-Fi is
macroeconomic
no longer
consequences to
trading.
that.
Disregard that.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has
I guess it is
3
still trading
mandates
on
from
weeks,
Congress,
but
not
don't
just
trade
jobs
it.
and
It's
stable
being
prices,
delisted.
but also
Oh,
moderate
I just screwed
long-term
my
interest
charts.
rates. So what does Congress mean by moderate long-term
Oh,
interest
no.
rates? How
Control
should
Z
we
doesn't work on
understand
that? Yeah, it
that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So,
okay, Fartcoin's
we
running
always think of it
to
as the
yesterday's
dual
high
mandate.
right here.
Watch now. Wake up
What?
in paradise.
YouTube and
something
their
that will
stupid
result
commercials.
from stable inflation,
Heading
low and
right
stable
for yesterday's
inflation,
high.
and
This would be
maximum
nice
employment.
if it could
So
do it before we end the stream.
We haven't thought about that for a very long
Let's see
time.
what we
as
get here.
A third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that considering that we somehow incorporate that in as something in a different way.
A third mandate. She's literally asking the Fed if they want to implement a third mandate. Like,
Thanks, Chair Powell.
come on,
Matt Egan
dude.
from CNN. We recently learned that
They
average
have
FICO
bosses,
credit
too.
scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So
now we did
that
make
should
a
help.
fresh daily high.
This rate cut
We
is
did not
coming at a
liquidate
time
yesterday,
when
but
the
that
stock
is a
market
fresh daily
is
high.
at
Here
or
is
near
the
all-time
daily
highs,
high
and
right
some valuation
there.
metrics are elevated historically. Is there a risk that
And I
cutting
can't
rates
imagine it would
could
just
overheat
liquidate
financial
today's high
markets,
and not
potentially
yesterday's,
fueling
with
a
it
bubble?
being right there.
We're tightly focused on
It's
our goals,
possible,
right? And
but damn.
our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we
fall
monitor
for
financial
that.
stability very, very carefully. And I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still
ETH is back to
in
up
good
on the
shape
day.
in
Ethereum
the
is
aggregate,
back
and
to
I know
up
that
on the
people at the
day.
lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices.
ETH is also holding support at September's VWAP. Right here. So that's how far you went today. I mean, this is a very tiny daily range with an FOMC meeting. Usually we see ranges like this on FOMC meetings. So this is crazy. There's no heightened volatility here whatsoever.
For any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Gene, we'll go to you for the last.
Yes, the lyrical asparagus. I am extremely bullish on the markets. I guess I don't know why you would say that I'm not. I mean, I don't like Fartcoin because Fartcoin is weak. It's red on the year. Fartcoin has been red for the last 2 months in a row. It's only up in September because of a dead cat bounce. I'm looking to trend follow trade Fartcoin, and Fartcoin's trend is down. So that's why I'm looking for shorts on Fartcoin. I do not have a bearish bias on the markets. The VIX is under the yearly opening range, so risk markets are trending higher. We're only looking for pullbacks to buy on the risk markets.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I
The
wonder if you can
yen
talk a bit
was
about
going
that.
down.
And then also
For me
at
to
the
be
long
bearish
run,
on risk markets, I would
wondering,
need the
do you
yen
see
to go
evidence
up.
that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation
Here's
goes
your
up,
yen.
Inflation expectations
It's going
will predict that
down
it takes
today.
just a little while to get back down.
So that means our USD
throughout
JPY
this,
trade short is
this
not working
period,
out today.
Longer term inflation expectations, both break even in the
We are
markets.
failing to
and
break
almost
down.
all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So
You're bearish
we don't take that for
engulfing on the
granted.
VIX.
We actually assume that our actions have a real effect on that, and that we need to continually show and also mention.
Bitcoin
discuss
literally just
our
liquidated
commitment to
yesterday's low
2%
and
inflation.
is bouncing.
So you'll hear us
It's
doing
bullish.
that.
That's a bullish move.
But we're, as I mentioned, it's a difficult situation because we have risks that
Barcoin,
are
though,
both affecting
that
the labor
thing
market
is
and
weak.
inflation. Those are our two goals, and so we have to balance those two. When they're
Not
both
today,
at risk, we have to balance them,
but
and that's
on
really
the
what we're trying to do.
Main trend.
Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
All right, he's done. We were a little bit behind there, but that's okay. Yeah, no, I totally have a bullish bias, but I think you should be buying dips, not buying highs. But yeah, our USD trade here not working out today. I was hoping we would get downside continuation on that, but from weak dollar, not necessarily from yen strength. So I want to be short the US dollar because rate cuts are typically bearish for the dollar. We don't know how much of these rate cuts have already been priced into the market, right? But you can see here, this is an obvious failure to break below a trend line here. So whether it does or not on Friday, because that will be triple witching. So like I said, today's move could be a fake out. You could see the real move happen tomorrow going into triple witching. Like the markets could stay bullish all day today, or even could have been bearish after the meeting and then get bought up on Thursday or Friday based on repositioning for the new quarter. You're getting ready to open up a brand new quarterly candle in 2 weeks. Well, a week and a half, right? The quarterly is, we're going to start Q4 2025. And the dot plot matrix that we looked at the beginning of the stream, which I did post that link for everybody if they want to go read that stuff for yourself, or just wait and read the Fed, because everything he said today will be in written form, will be in text, so you can read over it, highlight the important facts that you need to know or whatever to make trading decisions moving on. But yeah, ultimately we have a very, very bullish bias right here, right now. I am not concerned with inflation at all. Not concerned with the unemployment at all. Not yet. We're not seeing other markets positioned for inflation. We are not seeing other markets positioned for a recession. Not for high inflation, not for a recession. Therefore, you have to have a bullish bias. Me putting a put on at the beginning of the week was just a simple hedge. Like I maintain long positions in several stocks in risk markets. I own Bitcoin on cold storage. So by me taking shorts on futures or buying puts on options, those are simply hedging positions at the moment, just at the moment. Here, look at this chart real quick. This is a triple witching, not a triple witching. It's OPEX. It's your options expiries. And I want you to see how often you will find these points in time can cause turning points in the market. So here was the OPEX for April, and it happened while the market was pulling back, right? That ended up 1 day later calling the low. And then you had a massive bullish rally all the way into May's OPEX, right? Going into May's OPEX. Notice how at the highs, the May OPEX caused a multi-day correction. Ultimately, that correction was bought up. So that is all we're looking for here. We are looking for prices to trade up around the highs going into OPEX, and then maybe see anywhere between 1% to 5% correction, at which point we would then be looking to potentially buy that dip, right? Just because OPEX does occasionally call turning points. It didn't here, right? For July, OPEX did nothing in the way of call a top or call a swing low. Like it did here. 1 day later, put in the low, up it goes. Then you come into this OPEX, it does absolutely nothing. And your quarters are simply January, February, March, that's Q1. April, May, June, that's Q2. So going into, this would have been your triple witching here. Like what we're going to do this Friday. So it didn't even really cause a massive move lower. It in a sense, caused the low to be put in 1 day later. So, I mean, we don't know that this is going to cause a near-term top here. We don't know, but it could. So that was the reason for me putting on a single put. I'm not getting full on bearish the market. So I'm not quite sure why you said that. I have not insinuated at all that I am bearish. Right? Bearish on this USD JPY. Yep. Bearish on Fartcoin, maybe even Pingu. I'm less bearish on Pingu than I am on Fartcoin because Pingu is up on the year. Pingu is above August's open. So Pingu is currently up. Right? The trend is up. It's not up big, but it is up. Fartcoin, it's down. Down, baby, down. There is your liquidation above yesterday's high on Fartcoin. So we'll see. I don't think this isn't a very negative or a very bearish reaction. So maybe the near term downtrend is done on Fartcoin, right? It's looking like a support test and hold of the September VWAP. So if we were looking for this obvious downtrend to continue here at these very pivotal levels, it did give you a little bit of a bearish move, but as of right now, the sellers are not back yet. They're not back yet. So I do want to see if they hold the line here. If they do not, then I won't even have a bearish bias on Fartcoin anymore. But until the trend changes, until you're back above the yearly opening range on Fartcoin, you have to have a bearish bias. Objectively speaking, this asset is down on the year, right? It is down on the year. And it was up on the year. It was up on the year in April. April, it was up. May, it was up. June, it was up. July, it was up. August, it broke down. So if we're going to see that trend continue, then this is the area we want to look for shorts. That is how you follow the trend, right? That is how you follow the trend. You look to catch the swing highs for weak markets. You look to short weak markets. You look to buy strong markets. That is trend following 101. All right. KF, what do you think about MYX USDT short from the top? So no. I mean, can it roll over? Yeah, it can. Will it roll over? I have no clue. Is it weak? No, it is not. It is not weak. It is the very opposite of weak. MYX, and this is where a lot of retail gets it wrong. MYX is clearly making fresh all-time highs. Right here. Look at that chart. Why would you want to jump in front of this and try to short it? It's a support test and hold, and now you're seeing continuation. You haven't got the continuation yet, but you're headed there. You're headed there. This thing could hit 32, 40 bucks easily. It has been nothing but strong. No, I don't want to short any strength. I don't want to short strong markets. I want to own strong markets, be long strong markets. Your total 2 and total 3 had a slight correction here after rejecting highs, but you're not seeing downside continuation. You saw the shorts take their shot yesterday and today. They're not getting it. It's not breaking down. Not yet. It could. But as of right now, it looks like a support and hold. That's total 2. Here's total 3. Looks exactly the same. So Bitcoin is in a bull market. You are up on the year. Let's find another chart. Right? Bitcoin is up on the year. This was a 3-week pullback from the highs. So September, we're in week 3. This is third week of September. You've been going straight up all month. So just for Bitcoin to become bearish again, or even print a red September, you got to get all the way down to here. And you've got 1 week. After this Sunday, you'll have 1 more week for September, and September will be over. October are historically good months for Bitcoin. Here's your monthly returns for Bitcoin historically. Right here. So September on the average is bearish. On the median, it's bearish. August also not very bullish. Like on the median, it's bearish. October, objectively good on the mean and the average. Octobers are typically a good month for Bitcoin. November and December are typically good. So, well, December not so much. December is mixed on the median and the average. But October, November, both good. So we could see Bitcoin absolutely rip some faces off in September because everybody, right, most people are wanting to short Bitcoin because they know that historically speaking, Septembers are negative. If you look at the fear and greed index for your stock market, you're at 57. When has the stock market rolled over at a 57 greed? Don't it typically roll over from like the 90s? Yeah, typically, right? Typically you're pegging over here. Look at your crypto market. It's neutral. Bear markets don't come from neutral fear and greed indexes. They come from way, way deep in the green. ETF flows for this week have been positive. 15, 16. We don't have today's data, but so far, the ETF flows have been positive. All last week, ETF flows were positive. All last week. Let's look at Ethereum ETF flows for all of last week. Same scenario. On Monday, you had negative ETF flows for Ethereum, but then the rest of the week, positive. And then yesterday, very light, 61.7, very light outflows. Nothing major here. This looks more bullish than bearish. Daily exchange volumes look okay. This does not look bearish, does not look bullish. It looks normal to me. Very normal. Yep. And then the Fed watch, they were calling for literally a rate cut, and we got it. So markets are up. They're nice and bullish. Might pull back a little bit because of OpEx, but ultimately I think that would be a buying opportunity. MicroStrategy bouncing from the August low. That is the level that is acting as support. We know this simply because we have not been able to close a single day candle under the August low. So this suggests that we're seeing accumulation happening here on MicroStrategy. We are long MicroStrategy. So all in all, things look good out there. Except Fartcoin, right? It doesn't look good. It looks rather weak. Bonk strong on the day even here. Your crypto market watch list overall looks good. It's mostly up. things are mostly up today, so the Fartcoin short probably isn't going to play out today. We will catch it. If it does roll over, we will be there. We will catch it. But here's my watch list. These are basically the favorites and the things that we keep on watch for a day-to-day basis. It's mostly up. It looks really good. We can look at the crypto heat map. It's a little neutral. This doesn't have Bitcoin on it. Ethereum is neutral, but I mean, it ain't down. That's good. A lot of things are looking pretty neutral. I'd say by the end of the day, most of these will be flipped back to bullish. IWM pulling back here, or at least not reclaiming. Let's go look at it on an intraday basis and see where we lost it. Yeah, it looks like we lost it at the 2 o'clock meeting. You got a huge pump into the top of this range. And it dumped, and now it's just consolidating sideways. This doesn't look great, but it could just be a simple pullback. It's been so bullish lately. All-time highs right there for IWM. I mean, yeah. Clearly, people want to see this break down negatively, as it is a rising wedge. Rising wedges typically break out. Not typically, but people look typically for these to break out to the downside. They don't always break out to the downside. Yeah, for me to get extremely bearish, I need to see this asset running hard and strong to the upside. You're even seeing a negative day on the Swiss franc after a gigantic positive day yesterday. Swiss franc and Japanese yen are both considered risk-off assets. This asset right here is a lot of the reason why a lot of your macro guys still have a bearish bias, even though they've been wrong all year on the risk markets. Because, I mean, look what happened to this thing during the bear market, during the ES bear market. This thing was absolutely pumping. It is still pumping. Some people out there do not believe this bull market. But if you go and like ask Grok or your favorite AI large language model why the Swiss franc is pumping, it'll simply tell you that economic conditions for the Swiss support a bullish bid. Now, if both the yen and the Swiss are strong, then I will be concerned. Right now, the yen is just now breaking out of that 5-month range. If it falls back down into the range, then I will more than likely exit my USD JPY short. I will look for dollar weakness in a different pair. Because if the JPY fails with this upside break here, goes back into the range, then we could short the yen. Then we will be looking for yen shorts via futures or via Forex. Like we can buy Aussie yen or New Zealand yen or Euro yen. If the dollar is weak and the yen is weak, we can get long something like Euro yen and absolutely rock out with our blank out. You know what I'm saying? Where is Euro yen? Yeah, I mean, this thing looks like it's getting ready to bust to the upside. Look at this. Boom. This is bullish. It is a rising wedge, so you do have your pattern traders out there saying, no, it's bearish. Well, it's not broken down yet, so it's getting ready to break out, though. There's your rising wedge. Here's your highest monthly close. You're forming support at high month close. This thing has a measured move. If it breaks out to the upside, we could typically look for a run up to 178 or 177.8. Yeah. So things are about to change. Things are about to change, and we need to get through OPEX before I can give you a really good macro view on things. But yeah, very bullish out there. Let's see here. Can I check near? Absolutely. Let's go look at near. It's looking pretty good. It's still consolidating inside the monthly range. It's been bearish all year. There's not a really good solid point to watch for a short here. The 786 of August, if it rejects that again, then I would probably have a bearish bias. You're trading back to that now. So the fact that you rejected it the first time and you're not seeing that downside continuation would have these shorts on edge, because they still might be a little bit early. Now here's the thing. There is a daily supply zone right there at 793. So if it rejects a liquidation or rejects supply, then you can still have a bearish bias on this. All right, because it's down on the year. It's in a 5-month consolidation after being in a downtrend all year. So if the trend, the yearly trend, is going to continue, the better trade on near would be a short, objectively speaking, right? But markets change. They're not static. Just because the year trend is down doesn't mean the year trend will stay down, right? So I don't think I could take a short on near USD here at the 618. I would want to see a liquidation of Monday's high or a full-on retest and failure of daily supply, because you did get a bearish reaction at the last point to be bearish in the month of September. Above 2.898, you cannot be bearish any longer, because you may be in a trend correction still. Trend identification is so huge and so little, so few people can actually do it and do it correctly or objectively. What is going on? I have fixed this RSI 13 times. Move, dude, to new pane below, please, and stay there, you bastard. I will delete it if it continues this garbage. I don't need the RSI up there anyway. Oh, Fartcoin is not liquidating and running. It's still pumping. So things look to be bullish here on the very near term today. This is a rip. A rip above yesterday's high. Shorts are stuck. This is a short squeeze for today. For today only. So going into the end of the day, I will pay attention to the open and see what they do in Asia. If they run today's high, wherever it is, let's pretend today's high, which is right here, right now, doesn't get liquidated. Well, you're getting ready to make a fresh daily high, but say it rolls over now. I still wouldn't have a short side bias on this, not yet. Not after this move. I will need to wait until Asia, see if Asia liquidates the high and then rejects the high. If they do that, then I can throw one more attempt at it to the short side. But I won't be live for that. That'll be at 8 p.m. I'll be winding down, getting ready for bed. I'm an old unk. I'm an old guy. Yeah, it looks okay. This looks like a legit breakout here. I still like it to the downside. The trend is still down. as far as I'm concerned, I can have a bearish bias on this thing as long as it's under $1.08. But at that point, you would be objectively up on the year. So things would change for me a little bit there. Right? Things might change a little bit. Yeah, it still looks good for a short. I like shorting weak assets. Those are where you get your trend continuation a lot of the times. The reason we shorted that one the other day and made so much money off of it, the hi-fi, that was a pump and dump. That's different. That was a manipulated asset. We spotted that it was being manipulated. We knew it was being delisted and it pumped over 1,000%. We clearly identified that it was being manipulated. That's the only reason we wanted to short that. If you're trying to short an altcoin that is pumping right now, while you're in alt season, you are in alt season. Okay? As long as dominance is trending down, you are in alt season. This is alt season. So it doesn't make sense to short strong alts unless they're being delisted or something like that. Unless it's a clear and obvious pump and dump. The real only way to tell if it's a clear and obvious pump and dump is if it's being delisted and it pumps 800%. Fartcoin is the riskiest of risk assets. So this news could literally have people in full-on buy it all up mode. So in that case, your weaker alts may pump hard. The one that we are watching right now for a potential, it's a weak currency, Book of Meme. It is very weak. It almost supports bearish trades on it almost as good as Fartcoin does. But as of right now, the near-term structure is kind of up. You're building in a long-term symmetrical wedge here. This is also known as a rounding bottom formation or a cup and handle, right? So if it breaks out above this ascending triangle and the daily 200 exponential and gives us bullish continuation, we're going to buy this to see if it's going to give us a pump back up to the yearly open, which is a massive move if that were to happen. I don't think it will, but that's a 200% return if it does. It's a meme token. It has very little to no utility. So it is a garbage token. But people are absorbing this thing like no tomorrow. Like, yeah, I was hoping to get a bear trap first, like put in a nice down day, close under that trend line, make everyone think that it's actually breaking down, and then run back up into the consolidation, and then we would get long. Looking for it to smoke these highs. Well, they're your bail for the end of the day, so yeah. Where did the ES close? ES closed up on day highs. VIX closed as a bearish engulfing, but it did close up above yesterday's open. We got one more hour on Forex. So yeah, I mean, the market's done. Do Fartcoin, please. Let me see them trend lines. I don't have any trend lines on Fartcoin, my friend. But, I mean, we've been talking about Fartcoin pretty much all day. It's objectively red on the year. If you look at this as a yearly candle, you are bearish, right? Red means down. Oh, you're down. You're down on the year. You're a doji or an inverted hammer. You can call it whatever you want. It's red on the year. If you look at it on a monthly time frame, it's broken monthly support in August. And then, or sorry, in July, you broke monthly support. And then in the month of August, you tested monthly resistance and broke down. So you rejected the highs, broke down, then you got downside continuation. So this month, to me, as a price action analyst, looks like a bearish retest or a dead cat bounce or a bearish pullback. So as long as it's under the yearly opening range, which is this yellow line right here marked with 2.5, that's your 2025 yearly open. 0 spot 93.65. If it stays under this, I will have a bearish bias because it is objectively red on the year. It is green this month. It's up this month, but it is still red on the year. So the trend for the year is down. You rejected the highs and you put in downside continuation. This was your yearly high. Now you haven't made fresh yearly lows yet, but if you fail to break back above the yearly open, those fresh yearly lows will be my target. And that's a 77% move. But here's the thing. In order for something like that to happen, you would almost need bearish market conditions, which we do not have. That's why the bears are not really being able to get massive downside continuation here. But they are winning still. They are winning still. The bulls are not winning. The bulls are winning today only. So there's no trend here because you're currently in a 2-month range. Right? You're inside last month's candle. So you are consolidating. Since we were going down when we came into the consolidation, it makes sense to look for the down move to continue. So if you've ever learned or heard about 3-bar patterns, for instance, right? 3-bar patterns. This is a, so great. The pen isn't working again. Never mind, I can't show you. But it's just a breakdown, retest, breakdown. So we would basically be looking for the month of October to open and head lower. But that's only if it fails at the yearly open. Above the yearly open and you're objectively bullish again, and this becomes a higher low. So then you would have a bullish bias again. Yeah, that's objective analysis. But it did put in a double top. It did liquidate that second swing high, and it did break down with the vengeance. So I would assume the sellers would come back. Any threat to a market correction, an overall market correction, Farcoin will get decimated. You can pretty much take that to the bank. I know it is a sloppy ass chart. I get it. But it has to be sloppy sometimes for me to be able to explain it, actually what is happening. You know what I mean? No, we don't want to kill that. We want to kill this one. But what is actually happening right here is support is holding. Your VWAP for September, the monthly volume weighted average, is currently holding as support. So the month of September, which is bullish, has just put in a higher low. So for your trend line, because this is your September open right here. You just need to find September's low, which is, let's just go to the monthly and we'll put it in here. Here is September's low. So right now, since you have a higher low in the month of September, an objective trend line would look like this. Boom. Just like that. So if you're only looking at September's data, wait a minute, something isn't right here. This needs to go right there. So if you're only looking at September's data, there's your low of the month. That was your high of the month. You put in a higher low here, and then you broke out to the upside. Boom, boom, boom. So you're actually trending up for the month of September. And as of right now, this is just a higher low. If you break under this trend line, then there's a chance the uptrend for the month of September is over. But I'm trying to locate that swing high before it happens. I don't want to be looking for shorts down here. I would rather find them up here. If it's a short, it might not be a short. That's the year open. So we just try to objectively analyze price, what is objectively happening, what is occurring, and what do we think it's going to continue to do based on the trend dynamics. And once we get that info, we can then make better decisions with our trades. See, we're not just trying to short something because it's went up too much, or trying to buy something because it's went down too much. No, we're trying to follow the trend. The trend is your friend. But since I'm a day trader, sometimes I will take trades that are inverse to the trend, right? I will take inverse trades to the trend. So by me looking for a short on Fartcoin today isn't counter trend. That is a trend following trade. I am literally looking to short a downtrending asset. So I'm looking for that lower high to sell into. But I need it to happen at an objective level. Right now that it's trending up, now that those shorts are caught off sides, me included, I got stopped out. So clearly the shorts are wrong today. Tomorrow, that might be different. We could get something like this tomorrow. Boom. We could give all of this back tomorrow. I would love to catch that trade. All right. So yeah, there's your trend line for the month of September. You are welcome, Bitcoin. Bitcoin's in the house, everybody. Thank you for saying that. I really appreciate it. Great stream. Thank you. Wes says at NZO, a third of the stream was all about fart. Yeah, but they might not have been here, Wes. It's all good. It's all good. We're hanging out. We got nowhere else to be. I'm doing okay, the Agile Leader. I feel okay. I'm doing good. We've been killing it this week. Absolutely crushing it. Thanks to that pump and dump on Hi-Fi. We nailed that one like so much. It was fabulous. Fartcoin got us today though. And to be honest with you, the ENA position is starting to look a little bit worse for wears here. This thing was in the realized gains up to $200, $250 today. Being up here at 182. But remember, this is a bearish engulfing. This is a 4-hour candle, but that's from that bearish engulfing day, the day we shorted it. So here is the day we shorted it. Right in here. It traded up. It was the only asset that was green on the day. So we shorted the spike. We were shorting it at the previous day's open, but something happened. I think it was a 4-hour swing we were watching. Yeah, it was. Because it traded up to the previous day's open, and we missed it. So we were looking to mitigate our risk from this candle's high. That's why our entry is so much lower than the previous day's open. Right? But anyway, this candle ended up making a bearish daily candle for us. And it was a bearish engulfing candle. Here it is. It took out the previous day's high and then rolled over. So it was a nice trade. We're still in it. It's about to make a fresh higher low. I mean, a higher high. After 3 consecutive lower lows. This ain't the greatest look. This looks like a reversal. So here is where I'm going to mitigate this ENA trade from. I want to add to my short if it rejects here. It's just the midpoint of this daily range. Not quite the midpoint, but really close. You could potentially watch here even for an add, but only if it rejects there. I'm not going to add to the short if it breaks out above that with strength. Because if it does that, then this whole entire move right here will be looking more and more like a bear trap. I mean, the 50 daily EMA is still holding price easily. So this thing is not bearish as far as looking at this chart. If you analyze the entire year trend, it is bearish. I think, isn't it? Or did we just scalp it? Were we only looking at the scalp? I'm pretty sure it's bearish. Yeah, it's bearish on the year. Yep. There you go. You're down on the year there. However, it doesn't look like downside continuation. It looks like you're reclaiming the breakdown. The longer term, this thing is in a big range here, right? Just a gigantic range. To be honest with you, as long as you're like in this case, even though you're red on the year, as long as you're trading above last year's midpoint, which yellow would be year, right? Yellow begins with a Y, and so does the word year. So yearly fib would be yellow. Is it on log? It is. There you go. That's better. Where's the midpoint of last year? So to be honest, as long as you're trading above the 786 of last year, there is a chance that support is forming on this. This year is bearish, but it's trading inside last year's range. So we don't have a continuation setup here. You would have to break out to the downside or break out to the upside to have a continuation or a trending asset. You are absolutely sideways. So yeah, we could be wrong here. This is a gigantic bullish candle on the quarter. Yeah, it looks like the lows were set in June. And you've been trending higher for the last 3 months. So the last 3 months, you're trending up. But on the year, you're still down. But it doesn't look great. It doesn't look as good as the short on Fartcoin. So like if you look at the daily moving average structure, you're bullish. See how the moving averages are all stacked on top of one another? The 21 is the yellow, that's your fast moving average. The green is your 50, The blue is your 100. This is your 200. These four are EMAs. This is the 200 simple. So EMAs put more emphasis on near-term price action. Simples calculate all 200 bars, all 200 days. That's why we love EMAs better. They're quicker, they're more revealing on the near term. So this moving average structure and daily chart looks fine for bullish continuation. You have been trending for the last 3 months. You're just negative. You're red on the year. So we may be wrong on this asset. But Farcoin is opposite of that. The 200 EMA is above price, which is a weak signal. Ipingu looking good here, testing the midpoint of last month's range. Bonk well above the midpoint on August's range. Holding support at September's VWAP. Here's your weekly intra-week VWAP. It's looking more and more bullish on the near term. So be careful if you're looking to short ENA. I don't like it as much as I do like the Fartcoin short. So I'll probably close the trade for a small winner if it breaks up above this level. And just mitigate what I have as far as unrealized P&L. I never did take profits because this was a mistake. I didn't get in with a normal size position. It was much smaller than a normal position size. That's why I didn't take profits on it. But we did really good on that other one, so we're doing fine for the week. There is no concern of us going into this week red. Could I look at Uni as well? Absolutely. Come on, MicroStrategy. You got to do something for us. What is Bitcoin doing? Is it like... Bitcoin has been the most sideways. It's been sideways for a few days now. Still sideways today. It doesn't look great. ENA is liquidated yesterday's high. Yeah, let's go look at Uni real fast. Uniswap. I don't know if I have this one broken down here for you, but I can. Another one that's, in a multi-year range. It's bearish on the year. So since it's bearish on the year, we don't care about the other years. We know that it's in a multi-year range, right? And it's doing pretty much the same thing that ENA is doing right now. Except April set the lows. April set the lows, and you've been continuing higher each month. Each month has put in a higher low and a higher high. Except this month. But since this month, even though it's bearish on the year, if you were to look at the last 3 months and then try to trade in that direction, you would be looking for longs. But if you're trying to catch the year trend and you think this is ultimately just going to be a lower high, because it is a lower high, your yearly trend looks like that for now, then you would be looking to short up near the 786, 618 or 50% retracement of August. So, why does TradingView do that? Oh. There. That's your yearly trend there. There you go. Though if you break out of this, your yearly trend has been busted. I mean, you could say that that yearly trend was already busted. Because if you were using... Here, let's just get rid of the fibs for now while we're trying to analyze this way. Like if you were saying this is your yearly trend, it's a bit parabolic, but there it is, then you've broken out. So each time you set a trend line on this for the year's trend, it's broken out and set a higher high. So you can see how trend lines are so subjective and very, well, I guess it's not. If you break out above your trend line, then you don't necessarily want to be looking for shorts anymore, right? Not really, because the trend is still down on the year. You're just real close, like on the near term, you're bullish. So for something like this, I would probably just follow the daily 21 exponential, right? Since it's in a multi-year range, it's range bound pretty much all year. Look at the moving average structure. Is it bullish? If the answer is yes, even though it's red on the year, you could still potentially be a buyer at support zones. Like 200 tests. What about the weekly 21? Yeah, you held support at the weekly 21 last week and this week. So far, the weekly 21 EMA, even though it's not really helpful because we're in a multi-year chop, you are still holding support here. So you could be a buyer as long as you're not trading under the weekly 21. If you're trading under that, oh shit, am I on the wrong monitor? I damn sure am. Sorry. Damn it. Sorry. Here's the weekly 21 on Uni. You didn't see that trend line bullshit, nothing. Sorry. So here's your year open on Uni. So objectively, you're down on the year, right? This is a lower high for the year. Lower high. So there you could put a trend line on. But like I said earlier, you just didn't see it. You could have put a trend line on there. It just kept getting broken, right? So use the 21 to help you when there is no clear trend. The year it's down. But if you look at it on a multi-year, you're chop. You're trading inside January 2021's range. So you're basically doing piano keys. You're in a 1, 2, 3, 4, 5 year range. Okay? So you're not trending, but you're looking for trades on an intra-year basis because we're in 2025. You don't care what happened last year because, well, last year's over. Taxes have already been paid on what occurred last year. So you need to identify good places to look for trades this year. With that being said, you're above the monthly 21. You're above the weekly 21. So at least for now, the bulls are defending $8.99. So as long as you're above that price, let's get the exact price. So the 21 is the yellow. That's at 8.97. 8.97. So we can Alt-H our chart with a gold line. Gold line for me means the 21 exponential. But I have to identify it. Which one is it? Is it the week or is it the day? In this scenario, it's the week. So I could have a near-term intra-week and intra-day bias for longs on this, even though it's red on the year. because it's in a multi-year trend. I mean, it's in a multi-year chop in a range. Of course, the 200 is above. I get that. But you're still just in a range. I would probably have more of a bearish bias as long as you're below resistance. But I mean, this would be like a perfect candidate to sell options on. It's not trending, so it's a difficult trade. Here's your daily 21. So as long as you're below the daily 21, what's that price? 969. We'll just round up, call it 970. Round up, call it 970. There's your daily 21. Okay. You're not trending on the year. You're choppy on the year. For the year of 2025, you're down on the year. So, you're kind of right now in a no man's land. You can't really be super bullish on it because you're under the daily 21, but you can't be super bearish on it either because you're not under the weekly 21. And since this is the case, what I would do is I would look for shorts at the midpoint of this breakdown candle right here. Only once or twice. Like if you're good at managing risk, if you're terrible at managing risk, you're only looking for one entry. If you get stopped, you leave it alone. But if you're really good at managing risk, then you can look for shorts here if it fails. If it breaks out above the daily 21, you're no longer looking for shorts because on the near term, it's stronger than it is weak. Hopefully that helps. So I would have a very near-term bearish bias on it. Okay, so one last indicator that I will look at I also look at the 50, but on the daily, you're not trending. So the oscillator is not going to be very helpful. Neither are the moving averages. So we can look at monthly VWAP. All right, where is September's open? Right here. Boom. Okay, so there you go. That's another objective price you could look for shorts. Because for the month of September, we set a high and then a lower low, all in 1-2 days. So uni for the month of September is bearish. So you could look for shorts at the September open. Yeah, I would focus more on September's open for shorts. It has not been trending, so it is difficult. But let's get rid of this and this because those are old. We need to reset these. So we need a intra-month volume-weighted average price. We want that to be blue. We're under it. So at least we know that the volume for the month of September, the average is you're bearish. You're looking for shorts. Doesn't mean it'll work. This is a very choppy asset. It's a very difficult trade. Like I said, if you could trade options on this, it would be best to just sell 1036 calls and 868 puts and just ride out the chop. Collect an income via selling options. Give me 1 second here because on ENA we rejected that high. So if we get back up there, I'm going to add to that short probably. Probably just wait for the close of the day. But yeah, that's what you can do for uni. Leave it alone. It's very sideways. It's as sideways as it can get. But at least for the last 4 days, it's been weak. Very weak. You just set a fresh monthly low. Right? After making a fresh monthly high. That's a bearish signal. Anytime you're making fresh monthly highs, it's bullish, right? But then you make a fresh monthly high and then one day later you go all the way down and make a fresh monthly low. That was your monthly low right there. Now you haven't been able to get downside continuation. So what you could technically do is wait for a new monthly low and try to do like a breakdown short. Short the breakdown. I don't trade like that. I like to short the lower highs. Breakdown trades, in my experience, they didn't really work out for me when I was learning. Following the trend is what worked best. That's why it's the way I trade now. I collected all my data, broke it down, and realized following the trend works better than looking for breakouts. But if you have, really good risk management, then breakouts can work for you. But I would be looking to take a short at September's open myself, if it even got back up there. Uni. That's uni in a nutshell. We looked at Near and Fartcoin. Can I analyze Pump? Yeah, we just analyzed Pump the other day, but I don't remember seeing you, so let's go do that. Pump is very strong. I looked on several different exchanges trying to get data for this thing. Yeah, I think ENA is clearer. It tested the daily 21 and rejected, but I can't short that. So I can short there though. It would bring my cost basis way down. But I might be able to add there if it rejects, which it has. It liquidated and rejected. The structure on the 1 minute is still very bullish, even on the 30 second. The 5 minute will be too, of course. So this would be the objective level to watch for rejections. My higher level is up there at the 3. It was actually a 4-hour swing high. Or sorry, a 4-hour open. Where's that daily low? There. So those are the two areas I can focus on for adding to the short. Even though I don't love it to the downside. The 21 says I can short it. The weekly 21 doesn't say that. Weekly 21's all the way down here. So it's still way more stronger than it is weak. Looking at EMAs. Even looking at monthly VWAPs, this thing is still strong. Oh wait, no, it's under the monthly VWAP. Okay, that's good. Yeah, it's under the monthly VWAP. So here. Those are the only two places I will even attempt to short this thing. Or to add to my short. My short's up here. I would rather add to it here, as that would bring my cost basis down a little bit lower. But if it can't get back over that, I'll still add maybe. All right, back to Pump. Sorry about that. Yeah, Pump is extremely strong. There's not much data. You only have 1 month of data here. So hard for me to give you really anything. Like, you definitely don't want to be shorting this. Could it roll over? Could this be the high? Yes. But, like, why? Because why? Like, there has to be a reason for you to look for a short. It can't just be, oh, I think it's too expensive. Like, because that's not how markets work. There's really no reason to be looking for shorts here. Since it's been trading on Binance, right? Now on a different, less traded on exchange, you might have more data. That if you do on that, then maybe you could get a better analysis on it. But right now, I wouldn't be a buyer up here either. It is extended. It's up 80% from where it opened on the exchange. It's very strong. It's not weak. This is an inside day candle. If you had a big bearish breakdown candle and you like took out the midpoint of this expansion, then I would say, yeah, okay, maybe you can short it now, but not right here, not right now. I can't tell you to do anything on this. If you own it and you're up, keep holding it, because since all season isn't done yet, and until all season is done, these things can continue to pump. That's why I wouldn't short NYX, because it's still alt season. And NYX is strong. It's not weak. It's the opposite. You should have been buying support on a small time frame, like on pump. Now, it's going to be harder to mitigate risk on the small time frame because you do put in traps. Price action is fractal, so if you put in traps on dailies, on weeklies, you're going to also make traps on hourlies. So I mean, you just got to beware the traps. But I mean, ultimately, that's your lowest hourly close, and that held, right? You traded down into that today, and it held. So that's all you could have been waiting for and looking for. It would have been a scary buy as prices trading down into that level. But since there's no, higher time frame levels, there's really nothing else to go on here. I mean, it's the other day's swing low, right? So you could have been watching this swing low and said to yourself, as a trader, if prices reject on a pullback, right? Since this is a daily swing low, if prices fail to break that swing low, and also it fails to close an hourly candle under this hourly, I can be a buyer here. And then just set your stop really close, right? Because if you break below here, you're trading under that key day swing. And that means it could be looking for a deeper correction. And then you would just have to look for the next daily swing low to look to be a buyer. So here, it's so close to these levels. So right now you're in price discovery on this. Right now you're in price discovery, and I don't really see any, I wouldn't be shorting it here. Maybe up here if it fails. Yeah, that's going to be an intraday swing as well, or resistance. it would be a hard-pressed issue to short here or here. But if it could fail up here and then mark that day high as well, right? Because you also want to monitor that. You definitely don't want to short it if you're closing hourlies above this line, or if price is trading above this line, because then you're threatening to make an all-time high. So you don't want to be short. On bullish assets, you want to be a buyer on dips, guys. This is a dip, right? You want to buy that. It won't always work. I understand that. It won't always work. But if the asset is bullish, it should be making higher highs and higher lows. Like, that's the whole, like, that's the definition to a bullish asset. It is trending higher. It is making higher highs and higher lows. When you go into range bound scenarios, right? Like in this point, when it first started trading on exchange, it failed to close higher through here. Notice how support came in right there. It would have been a scary buy, but I mean, looking at this data, straight up, I would rather buy here than sell here based on this data, this info. So now you've got a wider range. So this was a tight range, but it broke out. Then it went into another consolidation. So you could have moved these lines up to here. Boom. Boom, right? This is your breakout candle. You closed higher than this candle. So now you're looking to buy dips into this swing low, as long as you're not closing under it. Or if you break out, which you did, maybe, be a buyer. Then you actually got upside continuation. So this range is much wider now than the 4 hour. So now you're actually putting in a daily. Your daily candles are the new range. So here is the new range. Right here. Right here. So until this freaking tool doesn't work, why do I keep coming back to it? All right, let me delete this thing. We're going to wrap up here shortly. But this is important. This is when you learn. When I rant, you learn. In task. Okay. Let me open it back up. Okay, so this is now the range. So until you break out and show upside continuation, you don't want to short it. You want to be a buyer. But where do you want to be a buyer? Here. Because this is the range. This candle, the entire day, did not touch that line. It did not touch this line. Okay? So for this entire day, you never got a trade set up. It never gave you a setup. Today, you got a setup. You traded down to this line. This is the buying area. Until you break down. When you take this out, that low, then you would be looking for this, right? It doesn't mean you will make money because the trend is still up. It's just those are your better areas to look. So if you break this low, your next area will be this candle's range. And probably in the midpoint. But here is the range you currently have. This is your monthly range. From low to high. Because it's an up month. If it was a down month, you would pull from high to low. But since it's up, pull from low to high. And then a retest of this area. If it holds, you can be a buyer. So even if today fails to come up here and check this high, then you can watch this low, the 382 or the 50 to be a buyer. Just make sure you're not risking an ass load of money because you might be wrong. But if you do it right and you risk a little amount, right? And it breaks down and you buy it, you're buying the 382. Say it holds and then it makes a lower high and then it comes and stops you out. Okay, that's okay. You just lost, right? And let's just say randomly $30. Perfect. So the next area you're looking to buy is here. It comes in, it tests it, and it goes, it bounces, it works for you. Now you're risking another what? $30. If it holds here, and then it starts to rip, then what you make would be like, and that's how you make money. Like, it's as simple as that. We're never predicting what price will do. We are doing this. We're just simply putting ourselves in a position to potentially do something like that. So minus 30, we're down 60. That means you profited $140. It's just simple math. But for some reason, people always want to short highs, and that's it. It's like it's always that. Or they'll want to buy a market that's literally freaking just straight dumping. And then they want to come in here and try to buy here, and then here, and then here, and then here, and then here. It's like, why? Why are you doing that? That is wrong. The trend is your friend. This thing is up. Watch the lows. Look to be a buyer on the lows. That's how you trade the trend. Trade the trend. Do that. All right. You guys have a fantastic... Wait, let me just make sure real quick. I'm just going to go through them real quick. I don't think there was any other asset on there. I think we got them all. Yep. Looks like we got them all. Oh, Tesla for Buster G. If you're still here, Buster, we got long Tesla the other day. We sold that, though. We got out of it. But I will look at it for you. Give me 1 second to pull it up. Where did it go? There it is. Yeah, we bought Tesla. Our target was the yearly opening range. We hit it. So we're out of that. I got out of it. Now we're looking for a retest of that. And we want to see if it holds support. So we're just simply waiting for Tesla to pull back into that range. If it can pull back into that and then hold as support, we want to buy it. You are up on the year on Tesla. We are up on the year. You're not making fresh yearly highs yet, but you are so damn close. There's your 2025 yearly high. So this thing has put in the yearly low, and it has trended away from that, and then it put in this long-term monthly consolidation, multi-month consolidation. When we broke out of it to the upside, it took off. That's what we were looking for. We failed the breakdown, and we traded back up into the range. So then we put on a bullish trade on this pullback, or this pullback. I can't remember. I know we bought the dip. It was probably here or here. Like, we bought the dip. We put the long trade on for the dip. We were selling like the 365s and we bought the 360s, something like that. We put on a bullish call spread. So that way it would help us mitigate our risk if we were wrong. If it broke back down to the downside, we would eat a small loss. That didn't happen. It broke out to the upside. So we made our money, we bounced. Now we're going to watch if it can form support on a higher low. If it can, we're going to look to be a buyer on that higher low. So now that you're breaking out and trending here, and your moving average structures are starting to break out, you could watch the shorter term time frames here. Now, on the 30-minute 100, if you buy that, you're going to be buying it really high in the range. Okay? If you look at how, I mean, this thing broke and went. Like, it literally broke and went. 2 days. Boom, boom. It's up there. Very expansive bullish move. Really big. So if you try to buy the 30, you're going to be buying highs at this point. My favorite level to buy would be here, if we could retest that. There's probably a couple gap fills. I'm sure there are sellers selling this right now, looking for this gap to fill. They may be right. They may be right. They will be right if I get a retest of the yearly open. But I would rather wait for it to pull back and give me an opportunity to buy it. Another thing I could do is I could simply watch this low right here. This is your highest monthly closing price on Tesla. Right there. The highest monthly closing price. So that is your high month close. Your high week close is way up here. So that might act as resistance. Then it might pull back to this week's low. If price comes down into this week's low and finds support there, I could be a buyer. Not this week, next week, or the week after that, right? But now the trend is up. It is definitely up. Very long-term consolidation here. Symmetrical triangle. It failed to break out to the downside and then broke out to the upside. Perfect. That's what we want to see in a bullish market. That's what happened. So now it's wait and see. Will it give us another opportunity? We'll see. We'll see. The markets are structured bullish. It looks really good. You got earnings coming up pretty soon, though, in October. So that might screw us on an options trade, but we'll see. I will let you know when I get back involved with Tesla. There's nothing to do with it now. I am almost 100% positive we got long on a live stream together. Like, I know I was live. I just don't remember if I was live for the public or live for the Discord. I know I was live. I'm live every single day. Every morning I go live. And we put this trade on live. As soon as we do it, as soon as we get what we're looking for again, we'll get it long again. The markets look really good. It looks like it's trying to break out to all-time highs. But I don't want to buy it here, not after a 3-week expansion. I need to see a red week. I need to see a dip to buy. If it can give us a dip to buy, we'll buy it. Tesla looked good, though. You were live public. Perfect. Yeah, see there, that's perfect. That's what we need. I am currently watching a stock, USO. I am currently watching this. We have another symmetrical triangle here. Well, no we don't. Hang on. We failed the breakdown. So that just means our range is bigger. Okay, so let's move it. We did get stopped out of this one because it did break down and we did put on the short on the retest. It played with us for 3 or 4 days here and then it ultimately broke back to the upside. So here's September's open though, right? And we do have an upside symmetry right here. Symmetrical triangle. All right. It's not the most beautiful symmetrical triangle, but it definitely is a symmetrical triangle. It is definitely in a multi-month range. It's in a 4-month range. It's going to be June's high. Same thing. Exact same pattern as Tesla has done here. Well, we don't really care about June's high or low yet. We're so far away. I mean, we would need to break out above August's high before we could even threaten June's high. Right now, we're threatening a retest of that September open. If we can fail to get above it, we'll look for shorts on oil again, looking for a breakdown of the symmetrical triangle. But we need to see first if it'll give us a break out to the upside and fail. If it doesn't fail, so like if it breaks out here, the thing about oil is at any time OPEC can ramp up supply or cut supply. So we don't really know what, I mean, we can see that what prices OPEC is basically manipulating the market at. But unfortunately, it's way far away. You are making lower highs here and lower lows still. But unfortunately, you're just in a 5-month range. So no trend here. But if it fails to break out to the upside, we can short it again. If it breaks out to the upside and doesn't fail, we can buy it. We could target like 78 or 80. Right? So we're going to keep this on watch. It did get back above the daily 21 here. So as of right now, since we failed the breakdown, this was the trend here. You did break down out of it. But then you put in this trap and immediately retrace back to the upside. So on the very, very near term, it looks like it's looking for an upside break, not a downside break. The dollar also affects oil a lot. So the dollar's been in a multi-month range, so is oil. So we kind of need the dollar to break out and start trending or go back up. It needs to go in one way or the other, and then we can start positioning trades on oil. But we're going to keep it on watch. And that's about it. I really don't have anything else that's like nagging at me to be a buyer right now, right this second. TLT did break out of a symmetrical wedge in a multi-month pattern, but I just missed it. I missed it. This was... We were watching it. It just literally chumped us out. Literally punked us out. We should have been a buyer as soon as we got back above August open. Or we should have been targeting. I shouldn't have even been looking at this monthly support. I should have been paying attention to August's low. It was another trader who told me about this. I wasn't even paying attention to it, but he was like, yeah, this thing looks like it's getting ready to run. And then by the time I got that info, it was too late. There wasn't anything that's a low, sorry. There wasn't anything I could do. I couldn't get the trade set up done in time to catch it. And that sucks. It would have been an easy long because we knew Fed cuts were coming. Right? It doesn't look like a long anymore, but it is. It is. They're going to cut more. Maybe not next Fed rate decision in December, but they are, the dot plot, they are looking for more cuts. So they're not going to hike. So we want to be a buyer on dips here. On the toilet. On the toilet. The toilet. The 20 year. We want to buy the 20 year. If we could hold May's high is a little bit too close for comfort. The June high as support, we could buy that. That kind of is the breakout. It failed here. There was your breakout. So we'll see if it can slowly pull back into June. If it can, we want to buy it here for a trend continuation to the upside. All right, you guys have a fantastic rest of your day. Make sure you guys trade safe, trade smart, and as always, happy trading, everybody.